Hey everybody, this is Bo Yoder. I just had a request from a friend to take a peek at some of the stock indexes and the gold market. So I thought I'd make a video that I could share with all of you, kind of update the 3D Apex perspective from the long term. If we take a look here at a monthly chart of the S&P 500 index proxy, the SPY, we can see that this market is just horrifically extended to the upside. No matter what analysis tool you use, that thing is just launched to the moon and beyond. We have a bearish engulfing bar here, which again, just with naked charts, really indicates a powerful reversal. The logical spot for that to go would be right back over here into areas of chart support. So if I go ahead and draw that out, bring that down a little more effectively. We're looking at somewhere right near the 154 level. So pretty significant correction just for a classic breakout retest. You can see, however, though, that we've got not a lot of power going on here. So that tends to tell me that perhaps this breakout retest, although it may offer some bounce potential in the very short term, is likely to produce either a lower high or a double top. Now, if the POMO doesn't kick in, because you can see here how power was very significantly lower on this last lower high. There was very sharp selling and a very clear break in the market. And then the Federal Reserve came back in and eased money, and boom, it went off to the upside. So one of the things about 3D Apex is it's not a magic wand, right? It's a tool to measure supply and demand. So at this point in time, right here, supply and demand was firmly to the downside, and then there was an artificial input of, in this case, supply in the form of the Federal Reserve easing the monetary supply, which changed the supply-demand balance overnight. So that we're still vulnerable to that. You can make all kinds of arguments as to whether the Fed still has the power to push the market, whether it's losing control or not. That's neither here nor there. I'm just looking at what I know about the market, which is the objective measurements that I have within 3D Apex. Okay, so there's our monthly picture. Let's go down to the weekly. All right, now we can see we've broken below the 20-period moving average. Again, let's go back and look at some support levels. You've got some support kind of in this zone here. That coincides with a 50-period moving average. That's a very logical spot to be tested. You can see we have a polarity flip in power. I would be very, very conscious of whether power goes down and takes out this low. In other words, if this continues to push lower and power just plummets back down, if it takes out the low of the last major swing low in power, that's often it's sort of a harbinger of doom that tells you that a whole new cycle is beginning. But again, this zone of support right in here is likely to produce some gyrations as the perma bulls come in and see those support levels as buying opportunities. As with any potential top in any market, be it an overall broad index or something small like an individual stock, there's always a lot more trend followers than trend faders. So usually you see a market struggle as it reaches an exhaustion point, an area of major resistance, and those resistances often are tested at least twice before any significant reversal occurs. You can kind of see that here. He had a test once, twice, 3 times, and then there was enough liquidity finally to push it to the upside. So anyway, there is the weekly. Let's go down to the daily where we can get a little more precise. On the daily, we're pretty oversold in the short term. You can see the massive power there. Starting to form a couple little tails. Very likely that we're going to get a push back up to areas of support once broken, which have now become resistance. So it's kind of a nice little zone there from the lows there and the real body. I would say that that's probably a pretty high probability target. You might see a bit of a bear flag, something coming up like that. And that would very likely be a good short opportunity, especially if it comes up into one of the moving averages and forms a qualified candlestick reversal. So I guess some people might see this as a sloppy head and shoulders if you think of this as the shoulder. I don't think it's a very high quality pattern, but nonetheless that could provide a little bit of liquidity to the market. I wouldn't, in this particular case, it's pretty much filtered out for us at 3D Apex because of some of the power measurements there, but nonetheless, some people will see that as a head and shoulders, even though it's pretty asymmetrical. But just from a 3D Apex perspective, you got a massive push in power that usually produces at least a retest of the lows, if not a breakdown. And we can see that there's a real clear target zone here from the weekly and the monthly support levels that the market is likely to be drawn to. So I would say down in the short term is where we're headed for the S&P, and then I'd be very, very cautious for a lower high or double top on a sort of investment time frame, a weekly or a monthly chart. All right, so let's go ahead and look at gold. Gold's kind of an interesting market. It's very chaotic. Let's go ahead and start as I did before on the monthly chart. It's kind of been in a major correction here. Actually, these old lines now can be moved. We can see that it's currently testing an area of major monthly support. There's also some support down there, so that's kind of the zone that I'd be looking in. Now, you remember me talking about how power is very predictive? Well, look at this. You got a massive move down in power. That would tend to predict that this market is going to break lower before it goes higher. So even though this is a double bottom pattern, I suspect this is going to be a pattern that fails. And isn't that cool that 3D Apex gives you that kind of clear guidance so that you don't get suckered in along with everybody else? Okay, so that's my initial thought on the monthly. Let's look at the weekly. Weekly is showing a really nice double bottom pattern. So from a pattern standpoint, that's totally beautiful. Look at the bullish engulfing bar there as a trigger. But look at the power. Power is very much non-confirming. So now we have two time frames telling us that this is a probably a false flag kind of a setup that's going to give you a little bit of money and then blow up in your face. So if you are playing in this market right now to the long side, I'd be worried, and I'd probably be taking some scalp profits. It may go up as high as the 50-period moving average, but all the power really isn't confirming this move, and I would suspect that that's sort of a harbinger of doom. So let's see if we have confirmation from that opinion on the daily. Oh, man, look at that. Clear as a bell. So we did have nice momentum on the surge here, good power to the upside. And then as the market drifted higher, first of all, very chaotic action, power has actually flipped polarity. So price has rallied up fairly well, but the polarity of power is actually bearish right now. So I would say this market's probably run out of steam. We're likely to see this go back down, test, and probably violate the lows if the deeper time frame power is correctly predicting the true supply-demand forces in the market. So again, I think that's a false flag setup, a fake out in gold. Be careful. Looks like there's plenty of liquidity here in which to exit. If you did get a nice entry off this bullish engulfing bar here on the daily, that looks like a pretty sweet setup. And there's definitely some profit on the table if you entered down near those lows. And at this point, I would say that you're definitely getting a non-confirmation of trend, and it's a good time to take profits and wait for this Pucology to kick out. Think of the people who have those stops. I mean, this is a weekly and monthly double bottom. There's going to be a lot of liquidity in that market. When that thing gets stopped out, it's going to get pounded to the downside. And that might very well be the exhaustive low, just based on simple concepts of market structure. Usually markets that have been in a bearish mode for a long time don't bottom until there's some kind of an insult bottom. All right, and so what do I mean by that? Let me just kind of draw it out a quick and dirty example. So let's say you have some kind of very significant bottoming pattern that forms. Let's say this is like a very deep time frame chart. Everybody gets on board, right? You tend to have this one last insult move. So it goes down. Maybe it goes down to new lows significantly, maybe not, but it just goes down, takes out, everybody stops, and then violently explodes back to the upside. That's a very, very common pattern. And I suspect that's likely what we're going to see in gold. Because especially if I go back to that monthly chart, you can see that there's a fairly significant level of chart support lurking down here under or right near the $100 level. And that loosely correlates with $1,000 an ounce. So just psychologically, $1,000 an ounce, if it tested that, that would be a pretty significant point for gold psychologically. Okay, so there you have it, a couple of quick looks at the markets. Again, two very interesting outlooks, both actually not so much opportunities, but information that's pretty clear that both markets are suckering people in for a bad time. So like with any trade, you can wait for the market to filter you in with a high probability entry, or if you've got a very low probability entry, such as we're seeing here in gold, that can actually offer some opportunity to fade the market if that's something you're comfortable with. Literally banking your high probability trade on the low probability entry, right? I mean, think about it. These are black and white. If you've got an 80-20 trade in your favor, then you got an 80% chance of success. If you've got a 20-80 trade in your favor, obviously you only got a 20% chance of success. You wouldn't want to take that trade, but by definition, you've also got an 80% chance of failure. And there are ways to structure trades around banking on that predictability. So there you have it, a little bit of an analysis for you on the S&P and gold. Hope that's been valuable for you. As always, thanks for listening. My name's Bo Yoder. Good luck and good trading.